Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. It has been another choppy session for the Australian dollar. After briefly contesting the top side of the range around 72 cents, the market reversed, but however respected the level of 71.60, which still remains vulnerable. Heading into this Wednesday, that is, the market now turns its attention to the US inflationary data, which is seen as a key point. Along with that, we also have the US Consumer Price Index on Thursday, and in addition, investors will be looking out for more comments on the timing of the forthcoming interest rate rise or rises from the US Federal Reserve Chairman Jerome Powell when he is scheduled to testify Wednesday Sydney time at 2 a.m. at his nomination hearing before a Senate Banking Committee. Looking at the technicals, though, the market is attempting to recapture its slight bullish bias due to the fact that the dollar index, which measures the greenback strength against a basket of 6 major currencies, has slipped under the 96 handle. However, looking at the pattern here, I feel any advancement towards 72.25 and with the 60-day moving average coming in somewhere around 72.65 to 72.80 may find a bit of a challenge there that could fail like we've previously seen towards this region. It is a key point, so do note that this 60-day moving average is where I believe the bears are likely to return. Looking at the euro, what the market took a challenge to that support line, which is seen somewhere around 112.70 and was rejected. From there, the market is now waiting for the key important data and also Jerome Powell. So no doubt the market may actually stage and continue this coasting sideways but slightly rising as the RSI is. Any advancement towards 113.60 with a cap seen around 114 should again see a bearish challenge and likely to be rejected because overall I'm still holding to the broader case that this market will eventually reach the 111 region. The dollar yen has remained somewhat negative since breaking the trend, along with rejecting that top side around 116 and this hanging man, and therefore still looks towards the bottom side of the range. After taking out 115.5, I'm looking at 114.60 as a potential target. This in terms has seen CAD yen also drop and post an outside range day or an engulfing candle, which now awaits confirmation. If we can see CAD yen close under the level of 90.80, then this should reinstate the downside and look towards the region of around 89.60.80. In light of the sterling pattern, I was anticipating a potential pullback, but it doesn't look like we're going to get that. In light of the RSI picking up a little bit more momentum, could actually see a break above 136.10. If we do witness that, then I would say there will be little or no pullback, and therefore could see a rise up to 136.70.90 to 137.70, where I've outlined just a bit higher around this region here. Finishing up with gold and oil, it seems that capturing the handle once again of 1,800 has put a little bit of a splurge to the bull case as the market now for the third consecutive day looks towards that top side of the range, seen around 1,812, even though the level was 15. I think it's a little bit lower. Nevertheless, if we break there, the market's still got a lot of work to do and clear 1,818 to get any clearance to that rally of 1,842. In light of the weak MACD, as I do put a lot of emphasis into this indicator, that the fact is momentum is lagging, and along with that, could still see the market reject this region anywhere from 12 to 18 on 1,800, and see the market drop back towards 1,796 to 1,788, which has been many times contested and held respectively. Dropping away from its 2-month highs, the oil outlook still remains capped around that $80 mark. The last 2 bearish days are now going into the third consecutive day, seeing a slightly upstep case here, but keeping an eye on this RSI, because if it doesn't break the midway point, then it's possible we may see this level 80 break and look up towards the region around 80 $3.50.90, where the October highs are. That wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day.